You pull into a quiet Kentucky neighborhood as a cold rain needles the windshield, turning streetlights into smeared halos. You can almost smell the wet leaves and chimney smoke as for sale signs lean like tired gravestones, some with fresh, price-cut stickers flapping in the wind. You thought this state was the safe bet. Steady jobs, affordable homes, a market that doesn't crash. But the air feels heavier now, like the sky is pressing down with every basis point the Fed ever hiked. You scroll listings in your car and watch numbers fall. The same houses that sparked bidding wars 2 years ago are sitting, stale, as buyers vanish and sellers blink first. This isn't just cooling. In pockets of Kentucky, the market is unraveling, quietly, brutally, and faster than most people realize. Subscribe to Market Countdown now, because we're starting at number 10 and descending into the cities where home prices are hitting rock bottom. And the final city is the one nobody wants to say out loud. Number 10. Florence, Kentucky. You crest the hills of northern Kentucky with Cincinnati's skyline faint in the distance. And Florence still looks like a commuter's dream. Shopping corridors, subdivisions, easy interstate exits. For years, people called it stable. But the market has started showing cracks. Back in 2022, Florence rode pandemic demand and relocation momentum, with prices pushed up by remote workers chasing space and school districts. Boone County's proximity to major employment corridors helped drive the run-up, and the city wore a reputation for predictable appreciation. Now, the numbers turn concerning. Realtor.com shows a median home price of $279,900, down 5.22% year-over-year, with a sharp 7.18% month-over-month drop. Active listings sit around 170, while inventory is down 27.50% YoY, a signal that sellers are pulling listings instead of accepting lower offers. Median rent is $1,797, down 11.02% YoY, and the market's price per square foot sits near 176. Days on market hover around 32, flat YoY. But that flat masks something worse. Buyers are negotiating harder, and sellers are cutting faster. Source: the pressure points are clear. Higher mortgage rates crush monthly affordability, and insurance costs across Kentucky have surged. Kiplinger cites $3,643 a year, average statewide, tightening budgets further. Source: as you leave Florence behind, the market doesn't look broken yet, but it's loosening at the seams, and that's how bigger drops begin. Number 9. Covington, Kentucky. You roll downhill toward the Ohio River, and Covington's historic blocks, brick facades, narrow streets, old charm that used to feel undervalued. For years, it was the artsy alternative to Cincinnati. Now, that story is starting to sour. Covington's modern boom accelerated in 2021-2022, when buyers, priced out of larger metros, hunted for walkable neighborhoods and older housing stock, proximity to downtown jobs. Riverfront redevelopment fueled the surge. But today the signals are troubling. Realtor.com puts Covington's median home price at $230,000, down 8.67% year-over-year. Price per square foot sits around $178, down 4.49% YoY. Active listings run near 321, with a 3-year inventory increase of 16.81%, meaning supply has steadily crept up. Average days on market are 43, and although that's down 16.28% YoY, the speed comes with a twist. Homes sell at about 98% sale to list, roughly 1.94% below asking, showing buyers are regaining leverage. Median rent is around $2,500, up 3.33% YoY, pushing renters to reconsider buying, yet higher rates keep them boxed out. Source: the culprits. Affordability compression from rates, investors stepping back from older rehab-heavy inventory, and rising insurance costs that punish older roofs and aging systems. As you cross the river line in your mind, Covington feels like a market trying to hold its breath and running out of air. Number 8. Paducah, Kentucky. You enter Paducah with river fog lingering low, the kind that makes even new paint look tired. It has always sold itself as a quiet, arts-forward river city, affordable, charming, safe. But the housing market is starting to slip. Paducah's peak came during the 2022 surge, when small city affordability became a national obsession. Lower prices, lifestyle appeal, and the remote work wave pushed demand into markets that usually move slowly. Now the downturn is growing louder. Redfin shows a median sale price of $201K in December 2025, down 3.4% YoY, with homes taking about 51 days to sell. Median sale price per square foot is about $133, essentially flat year over year, which signals sellers can't lift values without cutting prices. Redfin's sale-to-list ratio sits near 95.5%, meaning homes are closing well below asking, pure buyer leverage, and only 37 homes sold in the month tracked, showing how thin liquidity can get when demand evaporates. Source: the drivers. Source: our limited job growth relative to larger Kentucky metros, the higher cost of financing strangling move-up buyers, and the regional storm flood risks that raise insurance costs. As you pull away from Paducah's riverfront, the market feels like wet paper, still intact, but starting to tear. Number 7. Frankfort, Kentucky. You arrive in Frankfort under gray skies, the Capitol Dome rising above a town that always felt insulated. Government jobs, steady payrolls, a can't-lose vibe. That confidence is fading at the edges. Frankfort's climb was boosted in 2021-2022 by spillover from Lexington and Louisville, and by buyers chasing smaller city stability with access to state employment. Yet the data is turning uncomfortable. Redfin reports a median sale price around $250K in December 2025, with homes taking about 62 days to sell on average. Longer exposure that signals slower demand. Even when prices appear up year over year, longer market times often precede bigger cuts, because sellers get impatient, then capitulate. When days on market drifts into the 60s, the buyer pool is shrinking, and price reductions become the oxygen sellers need to survive. Source: contributing factors include rate-driven affordability collapse, buyer caution as economic headlines worsen, and rising ownership costs, especially insurance in a storm-prone region and property taxes that still add friction to monthly payments. As you leave Frankfort, the warning is clear. Even stable cities can start crumbling quietly, and quiet is how downtrends hide. Number 6. Owensboro, Kentucky. Owensboro greets you with wide roads and river air off the Ohio. Blue-collar roots, family neighborhoods, a city people once described as recession-proof. But the market is starting to behave like a pressured valve. Owensboro's pandemic-era acceleration peaked around 2022, powered by low rates and buyers hunting affordability. The appeal was simple: cheaper homes, predictable demand, and fewer bidding wars than the big metros. But the current picture is worsening beneath the surface. Redfin shows a median sale price around $197K in December 2025. Even if year-over-year comparisons bounce, the bigger red flag is how quickly conditions can reverse when a smaller market loses buyer volume. Thin demand turns into sharp price drops. Owensboro's neighborhoods show uneven performance, with some pockets seeing steeper declines that drag comps lower and reset appraisals. Source: the pressures. Buyers priced out by rate shocks, investors pulling back from lower rent yield markets, and insurance costs rising statewide, squeezing owners who already live near the affordability edge. Source: as you drive out, Owensboro feels like a market hemorrhaging confidence, not exploding, but steadily leaking. Number 5. Georgetown, Kentucky. You enter Georgetown with polished subdivisions and that growth town energy. Toyota nearby. Lexington just down the road, new construction, edging outward. It used to feel unstoppable. Now, that momentum is slipping. Georgetown's run-up hit a high in 2022, fueled by industrial employment, in-migration, and buyers fleeing higher-priced markets. The narrative was expansion, More jobs, more rooftops, more demand. But the shift is now alarming. Redfin shows Georgetown's median sale price at about $297K in December 2025, down 7.3% year over year. Days on market stretch to about 57, a major warning sign that buyers aren't moving at the old pace. When homes sit nearly 2 months, sellers start chasing the market down with reductions. In a town where new builds compete directly with resales, that's brutal. Builders offer incentives, and existing owners are forced to cut harder to stay relevant. Source: the drivers are clear. Mortgage rates crushing affordability, oversupply pressure from new construction, and rising insurance costs that inflate monthly ownership beyond what local wages comfortably support. As you leave Georgetown behind, the market feels like fabric tearing, unraveling thread by thread. If you're finding this data-driven analysis useful, like the video and comment which city surprises you most. Your engagement helps us continue this research. Number 4. Louisville, Kentucky. You glide into Louisville past historic homes and wide parkways, a city that always seemed large enough to absorb shocks. For years it was a steady performer, strong demand, strong identity. But now, the shift is undeniable. Louisville surged through 2021-2022 on cheap money, household formation, and buyers escaping pricier states. Investors also swarmed cash flow neighborhoods, pushing prices up fast. Now, the slide is serious. Redfin shows a median sale price around $248,500, reported as $249K in February 2025, with homes taking about 49 days to sell and 535 homes sold in that tracked month versus 586 a year earlier. Volume thinning as buyers retreat. Sale to list is about 97.8%, meaning sellers are closing below asking, and the average home sells around 2% under list. That's not a boom market anymore. That's a market losing pricing power. Source: add the weight of carrying costs. Jefferson County's property tax components stack fast. State 0.106 per $100. Metro Louisville 0.118, and Jefferson County Public Schools 0.717 before special districts. Source: as you pull away, Louisville doesn't look like collapse yet, but the foundation is softening, and soft foundations crack under pressure. Number 3. Lexington, Kentucky. Lexington welcomes you with bright horse country wealth at the edges and a bustling core that once felt immune: universities, healthcare, and a constant flow of newcomers. But even here, the market's tone has shifted. Lexington's climb peaked around 2022, when low rates and competition drove buyers to waive contingencies. It became a safe growth market. Stable employers, desirable neighborhoods, and limited land in premium areas. Now, it's intensifying. Redfin shows a median sale price of $338K in December 2025, but homes are taking about 53 days to sell versus 45 the year before. Time is rising, not falling. Sale to list sits around 97.8%, and Redfin notes homes often sell about 2% below list, showing bargaining power swinging back to buyers. Even with yo-y price gains in some reports, rising days on market is the early tremor that often precedes sharper corrections, because price is the last thing to break. Source: the squeeze comes from mortgage rates strangling affordability, remote work demand cooling, and higher insurance costs, cutting into what buyers can safely pay each month in pity. As you leave Lexington behind, the market feels like polished stone beginning to fracture, quietly but inevitably. Number 2. Elizabethtown, Kentucky. You pull into Elizabethtown with a kind of calm that used to signal safety. Military adjacency, family neighborhoods, and a reputation for steady demand. But now the calm feels deceptive, like storm clouds gathering without thunder. Elizabethtown's peak energy built in 2022, when migration and low rates expanded buyer pools. The narrative was growth, more arrivals, more development, more upward pressure. Now the damage is devastating compared to what locals expect. Redfin shows a median sale price of $265K in December 2025, down 14.7% year over year. Price per square foot is about 131, down 14.9% YOY, and days on market jumped to 45 from 32 the prior year. Even worse, the sale-to-list ratio sits around 95.8%, meaning sellers are conceding real money to close. That combination, double-digit price declines plus longer selling times, is the classic signature of a market resetting lower, not pausing. Source: the drivers, financing costs crushing demand, buyers waiting for better deals, and ownership costs rising, especially insurance, tightening the chokehold. As you drive away, Elizabethtown feels like a market collapsing inward, with comps dragging everything down behind them. Number 1. Pikeville, Kentucky. You enter Pikeville under heavy, shadowed hills, the kind of landscape that feels protective, until it feels isolating. Downtown lights glow against wet pavement, and the silence is louder here. For years, prices looked cheap, almost invincible because they were already low. That illusion is gone. Pikeville's last strong push peaked around 2021-2022, when even smaller markets caught the pandemic wave. Low rates and limited inventory gave sellers surprising leverage, and optimism crept in. Now, it's catastrophic. Redfin shows Pikeville's average house price at roughly $135K, down a staggering 55.0% year over year, with the market rated not very competitive, a compete score near 16 out of 100. When competitiveness collapses, liquidity evaporates. Buyers disappear, listings stagnate, and sellers slash prices just to create activity. In a thin market, a handful of distressed or deeply discounted sales can reset the entire appraisal landscape, dragging everyone else down with it. Source contributing factors include limited buyer inflow, job market constraints, higher financing costs that punish low-income affordability, and rising insurance costs statewide that hit hardest where incomes are tightest. Source: as you leave Pikeville behind, it doesn't feel like a dip. It feels like a floor giving way, the market plummeting into a new normal. You just traveled from northern Kentucky's commuter corridors to Appalachian valleys, counting down markets that went from steady to crumbling under the weight of higher rates, rising ownership costs, and weakening demand. Some cities are only showing early cracks. Others are already in full collapse mode, where price declines and longer selling times feed on each other. This isn't just a Kentucky story. It's a warning about what happens when affordability breaks and liquidity disappears, especially in smaller, thinner markets where one shock can reset everything. If you're buying, negotiate like the market is falling, because in these cities, it is. If you're selling, price like you're competing against tomorrow's lower comp. Subscribe to Market Countdown. Drop a comment with a city you want analyzed next, and I'll see you in the next breakdown.